Imagine a future where you're financially free, a future where every single dollar you've meticulously saved for retirement grows completely tax-free forever. Picture yourself in your golden years, withdrawing hundreds of thousands, perhaps even millions from your retirement accounts without a single worry about future tax burdens. This isn't some distant fantasy. This is the profound, liberating power of the Roth IRA. It is, without a doubt, the ultimate financial superpower, a cornerstone for building long-term wealth that offers unparalleled peace of mind for you and your loved ones. For decades, the Roth IRA has stood as a shining beacon of tax efficiency, an unrivaled tool in the arsenal of smart financial planning. The premise is elegantly simple, yet profoundly impactful. You contribute after-tax dollars today, sacrificing a small immediate tax deduction. In return, the entire landscape of your future changes. Every penny of growth, every investment gain, every dividend, and every single withdrawal you make in retirement becomes utterly tax-exempt. Think about that for a moment. No more agonizing over future tax rate hikes. No more gnawing anxiety about capital gains or income taxes eating into your hard-earned nest egg. Just pure, unadulterated, untouched wealth, compounding silently and relentlessly, year after year, securing a worry-free future. It truly is the dream scenario for anyone serious about lasting financial independence. But here's where this beautiful dream often devolves into a frustrating, even infuriating nightmare for those who are, by all accounts, doing everything right. You've dedicated years to your career, you've climbed the corporate ladder, perhaps you're an entrepreneur who's built a thriving business. You're a high earner, diligently crushing your savings goals, responsibly setting aside significant sums for your future. And yet, ironically, your very financial success has erected a formidable barrier. If your adjusted gross income, or AGI, crosses specific thresholds set by the IRS, thresholds that many successful professionals easily exceed, the government, in its baffling wisdom, effectively tells you, sorry, you're simply too successful for our direct Roth IRA party. You are quite literally locked out of contributing directly to this incredibly powerful account. This isn't just a minor inconvenience. It's a profound roadblock to optimal tax planning, a painful moment where you're forced to watch from the sidelines as others, perhaps those earning less, continue to build their tax-free empires, leaving you feeling penalized for your hard work and ambition. It's a paradox that has frustrated countless ambitious savers. But what if I told you that there's a perfectly legal, ingeniously structured, yet remarkably underutilized strategy that completely bypasses these income limitations? A powerful, legitimate financial hack that allows high-income earners like you to not only reclaim your right to participate in tax-free growth, but to supercharge your Roth retirement savings far beyond conventional contribution limits. This isn't some dubious offshore loophole or a gray area tax evasion scheme. This, my friends, is the groundbreaking strategy known as the Mega Backdoor Roth, and it is unequivocally poised to revolutionize how you approach your retirement planning, offering a path to tax efficiency you likely thought was impossible for your income bracket. Now, prepare to have your financial imagination truly ignited, because with the Mega Backdoor Roth strategy, we're not merely talking about squeezing in a few extra hundred or even a couple of $1,000s. Oh no, we are discussing the very real, very tangible potential of moving a staggering, mind-boggling $69,000 into your Roth IRA in a single calendar year. Just imagine the long-term exponential impact of that kind of capital compounding for decades, entirely free from the relentless grip of future taxation. This isn't a hypothetical scenario. This is an achievable, powerful goal we're going to walk you through step by step, right here, right now, in this comprehensive video. So, how exactly do we pull off this seemingly impossible financial magic trick? At its very core, the Mega Backdoor Roth leverages a specific, often overlooked, and crucially, an employer-dependent feature within your workplace's 401k plan. It involves two primary distinct steps. First, you make what are called after-tax contributions to your 401k. These are separate and distinct from your traditional pre-tax or Roth 401k contributions. Then, almost immediately, you convert or in-plan rollover those after-tax dollars directly into your personal Roth IRA account. It's a sophisticated, yet perfectly legal two-step dance. Contribute after tax to your employer's 401k plan, and then swiftly transfer those funds to your own Roth IRA. Simple in concept, extraordinarily powerful in execution, and entirely compliant with all current IRS regulations. We'll dive deep into the precise mechanics, the essential requirements, and the exact actionable steps you need to take to unlock this incredible, game-changing potential. Get ready, because your tax-free retirement future is about to get a serious life-altering upgrade. All right, so you're geared up for a serious financial upgrade. Now, let's peel back the layers and truly demystify the mega backdoor Roth. This strategy is powerful but often misunderstood, so let's get precise. First, let's clarify something crucial. You might have heard of the backdoor Roth IRA. That's a common strategy for high-income earners to contribute to a Roth IRA when their income exceeds the direct contribution limits. It involves contributing pre-tax money to a traditional IRA, then immediately converting it to a Roth IRA. Any earnings on that pre-tax money before conversion are taxable. This is not the mega backdoor. The mega backdoor Roth is an entirely different beast. It's about moving after-tax money from your employer-sponsored 401k plan directly into a Roth IRA. We're talking about massive amounts, far beyond standard Roth IRA limits. This distinction is critical because the source of funds and the tax implications are completely different. The mega backdoor capitalizes on a unique aspect of 401k plans, allowing you to supercharge your tax-free growth. To execute this game-changing maneuver, you need two crucial ingredients to align perfectly. These are not universally available, so understanding them is your first big step. Let's break them down clearly. The first ingredient is after-tax 401k contributions. As the name suggests, these are contributions you make to your 401k after your income has already been taxed. They are made on a voluntary basis. Crucially, do not confuse these with Roth 401k contributions. Roth 401k contributions are also after tax, but they're a specific type of designated contribution with different rules and limits. After-tax 401k contributions allow you to contribute beyond the standard employee deferral limits of your pre-tax or Roth 401k. They are additional funds you pour in up to a much higher overall IRS limit. It's vital to understand that while in the 401k, these after-tax contributions themselves don't grow tax-free. Any earnings on them would be taxable upon withdrawal, just like a traditional 401k. This brings us to the second, equally vital ingredient: in-service distributions or in-service conversions. This feature allows you to move money out of your 401k while you are still employed by that company. Without this, your after-tax contributions would be stuck in the 401k until you leave your job, potentially incurring taxable growth. The insignificant distribution enables the immediate transfer to your Roth IRA. This is the big catch. Both after-tax 401k contributions and in-service distributions are entirely dependent on your employer's 401k plan. Not all plans offer these, so checking your plan documents is paramount. Now, let's unpack the magic. Why does this actually work? The IRS has a high overall limit for total contributions to a 401k plan. For 2024, this limit is a substantial $69,000, or $76,000 if you're age 50 or over. This total includes your personal pre-tax or Roth 401k contributions, any employer matching or profit-sharing contributions, and your after-tax contributions. This is where the mega backdoor Roth strategy finds its legal footing. By leveraging these after-tax contributions and then immediately converting them via an in-service distribution, you are essentially circumventing the standard, much lower Roth IRA contribution limits and income restrictions. The moment those after-tax funds land in your Roth IRA, they begin to grow completely tax-free. This means all future earnings, dividends, and capital gains are yours, without Uncle Sam taking a slice in retirement. And it gets even better. Qualified withdrawals from your Roth IRA in retirement are also entirely tax-free. This is the ultimate goal, providing predictable untaxed income when you need it most. So, who is the ideal candidate to unleash the power of the mega backdoor Roth? This strategy isn't for everyone, but for a specific group, it's an absolute game changer. Let's see if you fit the profile. First, it's typically high-income earners. These are individuals who have already maxed out their primary retirement contributions. We're talking about hitting the maximum employee deferral for their traditional or Roth 401k, which is $23,000 for 2024. They might also be above the income limits for direct Roth IRA contributions, and even if they aren't, they've maxed out their direct Roth IRA contributions as well. Their savings capacity is simply too great for standard accounts. Second, IDing candidates possess significant additional savings capacity. After maxing out their standard retirement vehicles and other essential financial goals, they still have substantial disposable income they wish to save for the long term. Finally, and most crucially, their employer's 401k plan must support this strategy. This means the plan explicitly allows after-tax 401k contributions, and equally important, permits in-service distributions or conversions. If you meet these criteria, high-income, maxed-out traditional retirement accounts, significant additional savings, and an employer plan that's on board, then the Mega Backdoor Roth is poised to be your ultimate financial superpower. It's a sophisticated strategy, yes, but its rewards are immense. An unprecedented amount of tax-free growth and tax-free income in your golden years. This is how you build true generational wealth. All right, you're fired up, you understand the why. Now let's dive into the how, your meticulous guide to executing the Roth Mega Backdoor. This isn't a strategy you just stumble into. It requires precision and a clear understanding of your specific 401k plan. Before you even think about contributing an extra dollar, there's a crucial pre-flight checklist. The absolute first step is to verify that your employer's 401k plan allows two non-negotiable features. First, after-tax contributions, and second, in-service withdrawals or conversions. If your plan lacks either of these, the Mega Backdoor isn't an option for you with your current employer's plan. It's that simple. To get these answers, you need to engage with your HR benefits department. Don't just ask, can I do a Mega Backdoor? They might not even know what that means. Instead, ask very specific questions. Does our 401k plan allow for after-tax contributions in addition to my regular pre-tax or Roth deferrals? And then, does the plan permit in-service distributions or rollovers of these after-tax contributions, ideally directly to a Roth IRA? Their answers will determine if you can proceed. Now, let's talk numbers. The magic number for 2024 is $69,000. This is the IRS limit for total 401k contributions from all sources for one individual. This comprehensive limit includes three key components: your employee deferrals, up to $23,000 or $30,500 if you're 50 or older, any employer contributions, match, profit sharing, etc., and finally, your after-tax contributions. The Roth Mega Backdoor essentially leverages this after-tax component to fill the gap up to the $69,000 ceiling. Here's how you calculate your maximum after-tax contribution. Take the $69,000 total limit, subtract your elected employee deferrals, then subtract any employer contributions you receive. The remaining balance is the maximum amount you can contribute as after-tax dollars. For example, if you defer $23,000 and your employer contributes $10,000, that's $33,000 accounted for. You still have $69,000 minus $33,000, leaving $36,000. This $36,000 is your potential Mega Backdoor contribution for the year. This is the after-tax component that you'll convert to Roth. With your plan confirmed and your numbers crunched, here's the execution sequence, a clear numbered step-by-step guide. First, ensure you've maximized your regular pre-tax or Roth 401k contributions for the year, hitting that $23,000 or $30,500 limit. This is paramount, as these are your primary tax advantage deferrals. Second, begin contributing your after-tax dollars to your 401k. You'll typically do this through your payroll deduction system or directly with your 401k administrator, similar to how you manage your regular contributions. Make sure these are explicitly designated as after-tax contributions. Third, once these after-tax funds have accumulated to a meaningful amount, perhaps quarterly or even monthly if your plan allows, initiate an in-service distribution or rollover with your 401k administrator. This means moving money out of your active 401k while still employed. Fourth, and crucially, instruct your administrator to roll over your after-tax contributions directly to your Roth IRA. Any earnings that accrued on those after-tax contributions before the conversion should ideally also be converted directly to your Roth IRA, although these earnings will be taxable in the year of conversion. If your plan requires earnings to go to a traditional IRA, that's when the pro rata rule complicates things, which we'll discuss next. Let's tackle some critical pitfalls and how to steer clear of them. The pro rata rule is a big one. It states that if you have any pre-tax money in any traditional IRA, when you convert pre-tax dollars like earnings from your after-tax 401k that you rolled into a traditional IRA first to a Roth IRA, the conversion becomes partially taxable based on the total pre-tax balance across all your traditional IRAs. To avoid this headache entirely, the golden rule is to have a zero balance in any traditional IRAs if you plan on converting the earnings from your after-tax 401k that first went into a traditional IRA. Ideally, your 401k provider allows a direct rollover of both after-tax principal and earnings straight to your Roth IRA, minimizing pro rata issues on those earnings. Next, consider conversion timing. The sooner you convert your after-tax contributions from your 401k to your Roth IRA, the better. Why? Because any investment gains your after-tax money earns while it's still in the 401k become taxable when converted to your Roth IRA. Converting frequently, say quarterly or even monthly, minimizes these taxable earnings, maximizing the truly tax-free component of the strategy. Also, be aware of potential state tax implications. While the federal tax treatment is clear, some states might have different rules regarding Roth conversions. It's always wise to consult with a tax professional familiar with your state's laws. Finally, always track your basis for after-tax contributions. Your 401k administrator should provide statements and IRS Form 1099-R detailing the non-taxable portion of your distributions. Keep meticulous records. This ensures that the IRS correctly identifies your original after-tax contributions as non-taxable when they land in your Roth IRA. Understanding these nuances is key to successfully navigating the Roth mega backdoor and truly leveraging its power for your financial future. This isn't just about moving money. It's about moving it smartly and correctly. This strategic approach, moving your money intelligently and correctly, is precisely what unlocks the ultimate next level of wealth accumulation. We're not just talking about saving, we're supercharging your entire financial future. To truly maximize the impact of your mega backdoor Roth, consider integrating it with other powerful wealth-building strategies. Imagine combining your tax-free growth with specific dynamic investments. For example, strategically chosen low-cost, diversified exchange-traded funds, or ETFs, represent broad market exposure. These provide consistent long-term growth potential without active management hassles. By consistently funding your Roth IRA through the mega backdoor and investing it in strong growth-oriented assets, you accelerate your financial goals significantly. This creates a truly powerful synergy. This integrated approach transforms your retirement savings into a robust, self-sustaining financial ecosystem. It ensures your money works harder for you, generating passive income even after you've stopped working entirely. Now, let's talk about the unparalleled power of tax-free compounding. This is precisely where the mega backdoor Roth strategy truly shines, delivering extraordinary long-term benefits for everyone involved. Let's imagine you consistently contribute an additional $40,000 annually to your Roth IRA through this method for just 10 years. That's a total of $400,000 in after-tax contributions. If that money, now $400,000, grows at an average annual rate of, say, 8% over 30 years, you could be looking at a multi-million-dollar tax-free nest egg of significant size. We're talking about potentially over $4 million that is entirely exempt from federal income taxes in retirement. This isn't just a projection, it's the undeniable mathematical reality of tax-free compounding. Imagine withdrawing millions in retirement, not owing a single dime in federal taxes. That financial freedom, that profound security, is the ultimate reward for your foresight and strategic planning today. But why act now? Beyond the incredible growth potential, there's a crucial element of future-proofing your finances. Legislative landscapes around retirement accounts are always subject to change unexpectedly. While the mega backdoor Roth is currently a powerful and legitimate strategy, there's no guarantee it will remain exactly as it is forever. Policymakers frequently eye high-income Roth contributions for revenue. Taking advantage of this opportunity today allows you to lock in those tax-free growth benefits under current laws. It's a crucial proactive move to safeguard your future wealth against unforeseen changes. Don't wait for potential restrictions to be enacted. Secure your position and ensure your financial independence remains intact, regardless of what Washington decides next. Establish foundational tax-free wealth now. So, how do you take these powerful insights and turn them into tangible results for your financial future? It starts with a clear, personalized action plan for implementation today. Your first immediate step is to investigate your employer's 401k plan documents thoroughly. Specifically, confirm if your plan allows for after-tax contributions and subsequent in-plan Roth rollovers. Next, and this is absolutely critical, seek personalized guidance. We highly recommend consulting a qualified fee-only fiduciary financial advisor. They are legally bound to act solely in your best interest. These trusted professionals provide unbiased advice tailored to your unique situation. They can help you navigate complexities, optimize your strategy, and ensure full compliance with all regulations. Don't leave this to chance. To help you implement this powerful strategy effectively, John has created a comprehensive step-by-step guide and checklist specifically for the Mega Backdoor Roth. This essential resource is ready for your use. This guide breaks down every detail mentioned in this video, plus additional tips and resources to ensure easy implementation. It's designed to answer all your remaining questions and clarify the entire process. Download your personalized Mega Backdoor Roth implementation guide right now by clicking the link in the description below, or simply visit johndoefinance.com/megaroth. This is your critical moment to act. Equip yourself with this essential tool, start your journey today, and begin building that multi-million-dollar tax-free retirement you truly deserve. Take control, act decisively,